What's up, traders? Welcome to 7MinuteMarket.com, utilizing technical analysis to suggest direction based on human emotion. Today is May 13th, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is just my opinion. Lots to cover, so let's get started. What we have here is a chart of the SPY, which is the ETF that tracks the S&P 500. And one thing to take note is this bottom trend line here that we have broke down from and confirmed. We've come back up to back test it. Looks like almost twice there. Now, one thing this thing is making is this bearish pattern. We have this down move and we have this bearish consolidation pattern there. The next thing we want to notice is that we are in a confirmed downtrend. We have a high, a lower high, and we have a low and a lower low. However, the caveat or the change in possible emotion will be next week. Next week or tomorrow will be what you call the third week of the month, which is every third Friday of every month. There's options expiration. If you're not familiar with options, then you're only familiar with stocks, then it is not necessary to understand options, but it is necessary to understand how the options market can affect stock prices. So if you're not familiar with options, you can just do a quick Google search. But basically, options are contracts that institutions or big hedge funds that they write. The retail trader can write contracts, but not as much. It's more the institutional side. What they do is they write contracts and gives you the right, not the obligation, to buy a certain security at a certain price after a certain amount of given time, and or I should say within a certain amount of given time. And in order to do this, you have to pay a premium. Again, I am an options trader. However, I'm not really going to get into options trading right now. Maybe I'll make a separate video. All you need to know is that every third week of every month, or actually the week of every third Friday of every month, will be normally a volatile week, which is, sometimes it's not, but 90% of the time it is a very volatile week, and I'll explain why. Without getting into too much detail of how options work, I just need to explain that a lot of institutions and a lot of retail traders and whatnot all mixed in together. There's an anomaly, or this dark magic, this some people call pinning, in which case a stock price will actually be pinned to a specific strike price, and strike is the terminology in options pricing when you actually buy the contract. To make a long story short, what it looks like, and this doesn't always work, but whenever you have open interest or a high level of open interest, there's a good chance that the pinning will happen at that price. And that price right now with the highest open interest is at the 135 mark, and that's at this line right here. Okay, so 135 even. What this means is that if the institutions or the majority of the options contract is pinned to the 135 level, then the institutions won't lose as much and or actually make a lot of money. And because next week is going to be a volatile week, we should see a lot of whipping in the market, kind of like shakeouts, people who are long and people who are short. And essentially what that basically means is that imagine a beehive or a beekeeper, and you know how they pull, I don't know if you saw on the Discovery Channel or what, they pull out, that wooden board, and there's tons of bees on it, and they just shake it and all the bees just fall off like it was, like water or whatever. I mean, although it is short-lived and the bees eventually come back, that's pretty much what a shakeout is. Whoever's long, the institutions will drop the market and or the stock itself to stop out all the longs, and then vice versa for the people who are short. But essentially what is probably going to happen is we're going to have a lot of whipping up and down, up and down. And I'm not sure if it's going to go up first or down first or whatnot. But, there's a good chance. Obviously, there's nothing guaranteed in the stock market, but there is a slightly, maybe a 60-40 chance that by the end of Friday, we'll close at the 135 mark, and or at least close to 135. The only caveat would be if we have really bad news from Europe or whatnot, which would change the emotional standpoint of the majority of traders, and in which case would just bring us straight down. And I do have a mathematical calculated level here. I'm not sure if we go straight down there, but there's a possibility, as long as there's like if there's an earnings report or a downgrade or whatnot, some substantial emotional change in human trading, then we may see an earlier drop to the downside. As which to the upside, I mean, if we get really good news, we may have a slight pop. However, I really don't think that we can actually pass this line up here, this level up here. Sorry. We may actually pop into this level up here and then come down. I'm really not sure. Again, it's a very volatile week next week, and it's because of these institutions and these option traders, that have to write contracts and whatnot. And you have it's just really hard to explain. Just know that there is a 60-40 chance that we may close at the 135 level by the end of Friday, which is the options expiration day. With that said, what we'll eventually have a stock or the market just basically trading sideways, consolidating throughout next week before we see continuation to the downside. Again, I don't think it's possible that we can pass this level up here, but anything's possible. However, we do have some resistance, and we have these two moving averages here, so it would be pretty difficult. If we do, however, get past there, then there is a possibility that we may retest this level up there. So basically, the bottom line is expect some volatility for next week. We may get whipped up and down, left, right, but pretty much I'm expecting to trade sideways to a little bit upward before we continue our downward momentum, either end of next week or sometime the following. And again, if we do pass, if we are able to break down from this level here, I'm expecting at least a little bit of a bounce. This is actually quite a ways down, so we're gonna have some resistance around, around this area and such. But if we get past here, then I'm expecting a significant bounce off the 200 right there. Okay. Let's take a quick look at the dollar. I'm still expecting a slight, 50% retracement at least, somewhat. We had broken through this resistance point here. The next resistance point is up here. If we do tag this line, then I do expect somewhat of a pullback before we end up going higher. I do have a level, believe it or not. It's all the way up here at the 85, 84, 50 level before we get a pullback down on the dollar. And we're obviously also going to have a pretty significant resistance at that level there. One thing I wanted to show real quick on the SPY is that if I draw a line connecting this low here to this low here, and I create a duplicate as a channel, as you can see, the symmetrics of the market itself as of today, it matches up with this high and this high here. Okay, so this is your 7-minute market update, and I'll see you in the next video.